how do you, how do we pay ourselves as single member LLCs? I'm Garrett Weldon, and this is my channel where we talk about personal finance and what I'm learning in business. When I first started my LLC, the question was, how do I pay myself? I've got my separate banking account. I've got money coming into that banking account, and what's the appropriate way to pay myself? We're going to be talking about how and why you do it this way. All of these things are time-stamped below, so if you want to jump to a different section, feel free. But first things first, how do you do it? Answer, really you can do it whenever and however you like. But how do I do it? And what have I found that works for me? It's as simple as taking a check. So I get a check with my LLC, GKW LLC, and you simply on the memo line write owner's draw, make it payable to yourself with the appropriate date and the amount, sign it, and deposit that check into your personal checking account. That's how you do it. It's as simple as that. You can also do an electronic transfer if that's what you desire, but for me, having that record, that check record, just helps me when it comes to really managing my business and managing my personal expenses. Now, why do you do it this way? Why do you pay yourself and you title it an owner's draw? So this is coming straight from Irs.gov, and it talks about single member limited liability companies. So a few things to recognize here. Single member. An LLC, I came to learn, it's not structured that we so often think of typical corporate structures with a president and vice presidents and CEOs. That's not how they're typically structured. It's a member-owned company. And you, if you are a single member, like myself in my LLC, I'm the only one. It's just me. I do consulting work. I do some sales work. This is where I house some of my side hustles. I'm a single member. It's just me. And so as a single member LLC, you are what is called a disregarded entity. And what the heck does that mean as a disregarded entity? It basically means that you have not elected any other tax status, a C corporation or an S corporation, and the profits of the business ultimately transfer through and are the profits of the, in essence, managing member or the owner, which is yourself. And so being that you are a disregarded entity, not an S corp, not a C corp, your income from your business will be filled out on a Schedule C. And when it's filled out on a Schedule C, it's basically a part of your own 1040. So said in other ways, it's like, thank you IRS for spelling this out super clearly. Said in a more easy to understand fashion, your single member LLC, and again, this is the key, it's a single member. We're not talking about where there's more than one member, it's just you, is a disregarded entity. In this case, that means your company's profits and your own income are one and the same. At the end of the year, you report them with your Schedule C on your personal tax return form 1040. So making an owner's draw, which is what we talked about, right, with the check and owner's draw, is like officially noting the fact that some of your LLC's income is staying in the company as retained earnings for, we could say, taxes, we could say future development of your company to assure that it's appropriate capitalized. So that some is staying in as retained earnings and some of it you are taking for personal use. That is the way that it works in a single member LLC. And so sure enough, if you come over and take a look at my 29 tax returns, what do you see? A Schedule C. What do you see? A Schedule C. Well, a Schedule C was completed for my LLC, and it was a part of my 1040 form that was submitted. So that's how you pay yourself in a single member LLC. It's as simple as grabbing a check, writing owner's draw on the memo line, and in essence, issuing it to yourself. I always write it and then just sit and take a picture with my phone and deposit into my personal checking account, however and whenever you want. The other question that I had is, okay, I know how to pay myself, but how much should I keep in my business? How much should I assure stays as retained earnings to pay for taxes and to assure that it's appropriately capitalized or to have set aside for future expenses? And that I will address in another video, but at a high level, I am starting to follow what is known as the profit first principle. And this is a principle from, in essence, this book by Mr. Mike M., however you say his last name. And the idea is as such. So frequently in business, we talk about our sales minus our expenses equals our profits, almost as if profits was an afterthought or the leftovers. As opposed to what's proposed in Profit First, you have your sales or the income coming into your business minus your profits equals your expenses. That is the principle that I'm starting to follow to assure that my business is appropriately capitalized to cover expenses and taxes, and that I am allowing my business, as it says here in this book, transform your business from a cash-eating monster to a money-making machine. Yes, please, a money-making machine. I hope this information was helpful for you and really helps answer the simple question of how do you pay yourself as a single member LLC. I've also picked out a couple more videos for you that I think will be helpful as you, again, continue to explore personal finance and business and learning with me on this journey. Please, please, please consider subscribing below.